Good afternoon. It's Brian Shannon from AlphaTrends.net. Today's Friday, the 10th of October, 2008, and we got a big green candle here on the chart. But the S&P 500 did finish with a loss. I'm showing right now of 43 cents, or just about a half a percent. And obviously, the volume surged in here today, biggest volume that we've seen all year. So that's encouraging to me. That says that perhaps we have something that we can hold on to and rally from. The market is so deeply oversold that common sense would tell you that it would bounce, but common sense would have told you that in the last 3-4 days as well. What we have to do is always focus on price action only. Let's take a look at the weekly time frame just to get some perspective on how big this week was. And in fact, we're only the seventh business day into the month, and look at where we're eighth business day into the month. Look at this month right here. I mean, these are moves that typically take a year or so to take place. So just massive volatility in here, and when you look at the 1 minute time frame, it becomes even more apparent. The market obviously gapped lower, continued to sell off for a little bit, came down to S2 here on the SPY, and then just a huge rally. That rally on big volume, followed by low volume consolidation, and another push higher. But that move then failed right around, coincidentally, or maybe not coincidentally, at about 10:25, and that's when our president there, Mr. Bush, signed on to the television to restore confidence and assure the public that the government was going to do anything it could to stabilize the financial markets. And ironically, or maybe not ironically, people looked at that as a reason maybe to sell. The market got below that VWAP, tried to recover over here. I'd posted it a couple times during the day, and then came down and successfully tested the lows. It was more apparent actually in the NASDAQ, where we made a lower low, and we'll take a look at that later. But later on this afternoon, this market just rocketed higher from here. Most people were looking for a return of margin selling and that sort of thing. That's what everyone was talking about. But it rallied obviously right past that VWAP and continued to move higher. So we've got maybe the beginning of a recovery in here. You've still got to be very careful. All the trends are clearly lower, and any rally that occurs within here obviously was within the context of a larger downtrend. I was thinking maybe the market had more the NASDAQ had the potential to rally up towards the 5-day moving average, and that's something we'll want to keep an eye on next week. I do like the way it pulled back in here towards the end of the day and built this little base. I'm going to post some charts over the weekend on the blog of 1987 and 1929, October of those 2 months. So be sure to take a look at those, and I'll also repost those longer term bear market perspectives as well. But clearly just a fantastic day trading environment in here. The opportunities long and short are just tremendous. So looking at a 10-minute time frame, here's where we've got the most likely first level of resistance. But I mean, most of the selling has been done. This market could continue to rally. What we need to really focus on is managing risk. Risk management is always job number one. And again, we're within the context of a downtrend. We've seen obviously some very powerful rallies develop out of oversold conditions even earlier this year. But again, every single one of those rallies, like this one that we saw, after the January sell-off, every one of those rallies did fail. Doesn't mean this one will, but just keep that in mind. A lot of people criticize the conservative nature, but I think they're starting to realize that really defense does win the game. The Russell 2000. This week we were looking at the breakdown last week below the prior levels of support at $64 a share, $63 a share, and I'd said the next potential target was down near $50. And again, I have to emphasize, I never expected that $50 level to be hit so quickly from this head and shoulders pattern, the target of that measured move. But we came down. Obviously, we penetrated that to the downside. downside here today. That $50 level gave way, but in here we saw a lower low on less volume too. When it occurs on less volume, it says the emotion was super high at the beginning. The test of those lows means that maybe just some weaker longs that they were getting shaked out towards the end of the day, and when it recaptured that daily VWAP, particularly in the last hour when most people were looking for sellers to come into the market, that's what signaled the big rally that we've seen in here. So looking at a 10-minute time frame, this market did come up to its 5-day moving average, and the Russell is clearly the more volatile market, in particular just recently with the break below $64 a share. Selling, gold was weak earlier on during the day, which was kind of surprising a little bit because the S&P 500 and all the markets were down so much. But I was thinking, and I didn't post it on the blog, but I was thinking maybe this signals that the end of the flight to safety. And for the week, actually, gold was up only slightly after seeing a massive, well, not massive, but a 10% or so rally during the week. It came down very strong, and maybe that's signaling, like I was thinking, that people aren't as afraid, and the flight to safety isn't there as much. So they're taking money out of gold and perhaps moving it into back into equities because they've gotten so oversold. Oil as well, that was down. The USO was down $3.19, and these are this is the market you want to stay down. Obviously, complete destruction of the bull market that existed, and we're not well off. I mean, we're well off the highs for the year, down almost 50% in the USO, and obviously lower than where we started the year off. So that's good news to the consumer. Let's take a look now at the financials, the XLF. Financials, they were actually one of the first groups really to kind of show the strength in here. Now, on a percentage basis, they didn't rally as much, or I guess I shouldn't say that, because they were up $1.26, so they were one of the stronger groups, and they were up 9.2%. And if you look at the the leveraged vehicle for that as well, the UYG, it was up obviously an even larger percentage amount. Here, on the financials, the XLF, we've got this downtrend line that they came up to, and looks like it broke. So, if you're going to play these for a bounce, just again remember risk management. Maybe underneath this level here is where you would put a stop. But they've gotten so violently sold off, and on this weekly time frame, look at the massive volume we saw in here, that I think you could expect to see a continued rally in here, but you have to focus on risk management first. Don't just look at it and say it's down so much that it has to bounce, because again, if you have been employing that strategy, you probably sold near the lows today, or probably aren't even listening to this video. Let's take a look now finally at the NASDAQ 100. The NASDAQ was down 20 cents, the Qs that is, 0.63%. We saw a big volume in here, not as big as the S&P 500, but on the weekly time frame, we took out all these lows obviously this week. Back on the monthly time frame, we had exceeded that 61.8% retracement. Let's take a look at that again, because that's kind of interesting to see that the 61.8% retracement was taken out. Maybe we rally up back towards that level next week, $33.13 or so, and then we start to stabilize. Expect large volatility, though. We're going to continue to see massive volatility in this market, as there's just so much uncertainty still about all the economical situation throughout the world, and all the damage that's been done to people's accounts and the psychology of the investors and traders that have been flushed out of this market, basically. Here on the 10-minute time frame, we can see that didn't quite make it up to that 5-day moving average. That's at about $32.80. That's where I was thinking that maybe the market would rally up to. I'd mentioned that on the blog late in the day. But here, let's take a look at the 1-minute time frame. What we saw in here was that we actually exceeded the lows right in here. And then at this point, I said, basically, let's see if it can hold the lows, have tight stops. I was long a little bit, but I wasn't definitely going to suggest that anyone else take that trade because there was just, we were still below a daily VWAP. We were still, just coming up off these lows, but we're also right at S2, and a lot of times what we see, and this is what our cash-in has been talking about, is that you want to see that big flush downward open, and then a rally. That rally then fails to hold. They test it, and then shakes out the last of the weak longs, and then we get the rally late in the day here. So I think that the market probably ought to gap higher on Monday, but if you want to bet on that, that's the market's closed. It's too late. But that was the historical precedent that we saw both in 1929 and 1987. Let me pull those up real quick for you, and then I'll put this more on the blog over the weekend. But here we saw, this was the low in 1987 right here. It rallied up that day, closed right here, and then you can see the huge gap, and then the volatility after. So here's 1929 as well. Here we saw the the first drive lower, the first real significant drive lower in October. We saw that here's the reversal day, and then it gapped higher. Then it came down though and made lower lows again. So we're not out of the woods yet. Don't get too confident on this market. It just remains a great day trading environment. It's been a long, exhausting week, and the brokerage firm I trade at made a lot of money off me. That's for sure. Hope you guys had a good week. See you next week.